Hello, traders. Nick Shaheen here, settling the debate that I kind of saw on CNBC this morning. Yes, I do watch CNBC every once in a while, although I'm down to minutes a day now because the content is, as they say on CNBC, suboptimal. I watch it a couple minutes in the morning to read the ticker tape while I'm sipping some coffee at dark o'clock on the West Coast. And then somewhere around the Fast Money guys halftime report, and then maybe after the market closes, after 2 o'clock, maybe if there are some earnings, to catch what the memes are going. So other than that, it's just unwatchable. Everything else is just full of junk, filler, and I have beef with a few personalities in there. The hypocrisy of Kramer. I mean, he's not an idiot, that's for sure, but he's a hypocrite. And he's like, what do they say? There are two kinds of people in this world: the righteous and those who are not, and it's the righteous are the ones that get to decide which is which. So regardless, today's point is to settle the battle that happened this morning between Whopner, the judge, and what's his name? Reformed broker. I can't remember his name now. Anyway, so Whopner wants to make the headlines, which, by the way, is my least favorite guy on there. He's just an ass. He's just an ass, all around ass to everybody, even his own people. So he gets the traders and he asks flat out, and he stops him halfway through the answer, asking Josh Brown, are stocks too high right now? How the fuck do you want him to answer that? Of course he's going to say yes and no. And he goes, well, that's a cop-out. Bullshit, it's a cop-out. YouTube is going to probably block my video with all these cuss words in there. Anyway, it's not a cop-out. And I'm not a friend of Josh Brown. He's actually ran me through the mud on Twitter before because he has a posse the size of whatever. I have 4,000 followers. He's got like 4 million followers or whatever. So I'm not a fan of him, but I'm definitely not a fan of an asshole trying to pass for an expert. Of course, the answer, there's no one-size-fits-all trade. And besides, cheap stocks can get cheaper, and expensive stocks can rally. So what's the point of the question, are stocks cheap right now? There's not a trading answer out of that one. I'll give you an example. And sometimes it's the same stock. Micron, a couple years ago, it fell to a 2.8 PE, like under 3. And people called it a value trap. They said it was cheap, but don't buy it. I was selling puts at under 30, and I was like getting in trouble with that. I was like, what? And now it's 50, and people can't have enough of it. Nobody talks about it being overpriced. So it doesn't matter if stocks are cheap. I'll give you an example. So this is the S&P, right? So all stocks have to trade within this market, and this market is expensive. So let's say Amazon, even Amazon. So this is like the expensive stock, right? It's not. The PE is expensive, but its price to sales is the cheapest of all the giga caps. So Amazon's price to sales is under 6, maybe 6 now. Under 6, right? That's cheaper than Apple. That's probably half as much as Facebook, if not more. The discrepancy between that. So it's not expensive. But that doesn't mean it can't fall, because it had, almost twice. So it has to trade inside the prism of the SPY. Let's go to a daily. Okay, so this was the COVID where the world was great, and then the world turned to shit. And now the world is still shit. So one of these is wrong. Somewhere in the middle lies the truth. So to answer that cornhole's question, are stocks too expensive? Yes and no. And besides, the answer doesn't matter anything about price action. What goes forward as far as price? Can they rally? Sure, look at Zoom video. It's expensive as fuck, but it can still rally. So don't ask stupid questions. Impress your peers, Mr. Whopner. And be respectful of the other opinions. Don't shut them up like that. They're offering you golden information sometimes, especially when it's as simple as a concept that this guy keeps proposing, Josh Brown. He's one of the ones that actually makes sense when he speaks. Kramer makes sense when he does his homework. So leverage Kramer's homework, but ignore his antics. Mask this, pajama that, moron this. Just look at yourself, Kramer. And just take it with a grain of salt. So what's the solution? Turn it off. Turn the news off. Why? Because you don't need it. It takes probably 3 hours to learn basic skills of looking at a price action and say, okay, this makes sense, this doesn't make sense. I'll give you an example. So this is the S&P, and it's a 60-minute chart, a 1-hour chart. Like you go, oh my gosh, it's all over the map. Is it? It's not. You can draw lines every day and map out your day. Here are my lines. And I share them with friends, and you can do your own. I'm not from Wall Street. I learned to shit on myself, by myself. So you can tell that, okay, last time we were here, we failed. How do I know that? I looked left. We failed. So onus is on the bulls to take it out. So the first time at it, they're going to fail. And if they set a higher low, that's fine. Because now they're falling into a place where they bounced. And bounced. So you can go from one level to another and expect. I can't tell you if it's going up or down, but I can tell you if they cross this line, they go to here, or try to go to here, and they're going to face resistance last time they failed. Conversely, if they lose footing here, they're going to overshoot lower, hit the level that you looked at before and said, okay, this was a bounce area. Look, this is not a coincidence right here versus this right here. It's not a coincidence. Somebody in the chat room today said, there are no buyers. Doesn't matter. The machines are doing most of the trading. There's not like somebody waiting to hit, they feel like they need to go along. The machines, they call it, oh, it's algos. It's always fucking algos. Tell me when it's not algos. Algos just basically means a machine trading based on the preset program, right? So if indeed 90% of the trading is done by machines, then we should note it when it's not algos. When somebody says, you know what, override this program, I'm seeing something else. Tell me when that happens. Tell me when it's human, not algos. It's always algos. People love to throw this term out and just expect, everybody go, ooh, ah. Just spend a few hours, learn the price behavior, turn off the news, and I challenge you, you'll be a better trader and a happier one at that. So if price, don't trade by gerund. Isn't called gerund like anything with ing, like falling. Falling is not a trade, or rallying, spiking, dumping. It only matters when it is at a level that actually matters. Like if it's falling past this line, it matters. Otherwise, it's falling into support. Same here. So this is falling. If I go on to 5 minutes, oh my gosh, let's reset it. Oh my gosh, it's falling out, it's falling, and then you get the FOMO and you bail, or you buy puts at the wrong time. Look left. That's where it had a chance to hold. Now, if it bounces here, I know it's going to hit resistance for the same concept. It's going back to where it fell from. So it's going to be resistive. And if it draws and it fades and it hits that and fails again, then it could trigger. Then you chase it down once it loses that because it looks like a head and shoulders. You just got a lesson on head and shoulders. Plain simple English. I love it. Then they love it, and then they love it a little bit less, and then they go back to the same neckline, and then they lose the neckline. They're exhausted. They're going to go just a couple of hours, 2-3 hours. You can learn all this stuff. At least stop making the same mistakes. When you feel something, ask. Is this a good time? Just go on Twitter and say, is this a good time? There'll be 1,000 people that tell you different things. At least they give you different opinions of buying puts right here or giving up on your longs right here. Same as chasing up here. You should know that this is where it failed before. I bet you we can find a level of failure before. Boom. Look at this. To the penny almost. Look where this is to the penny. You think machines are just by chance selling it exactly at the penny that sold from before? That's a major accident scene. Let's see what happened here. Okay, so right here, look at this line right there. And look, this was not a coincidence. They came at it again, they beat it. So now it looks like a cup and handle. That's why I drew the yellow thing. It should have gone higher. Is this the end of it? No, they're retesting the neckline. Okay, this is not a hard line in the sand. It's just an idea. So they busted. Now they're testing for footing to see if they can finish this job. So if I start shorting here, I'm making a mistake. I'm assuming the bears are going to prevail. So now if I wanted to draw a mini line here, I'd say, you know what? I don't like this. And there's the situation where this could happen here. So I want to keep that on the radar. Or I can put an alert if I'm not at my computer all the time. So I can do that very easily by just setting an alert. And I'm not being very accurate with it because I'm not trading intraday, so I really don't care. I'll just say caution, inverse cup and handle or something. Or head and shoulders in this case. So And this is TradingView, by the way. I don't get paid by them. It's a pretty good little program. They do have alerts. I don't know how many free you get in the free account, but $15 I think will get you the first level. I know somebody's going to ask in the description. So get to know the set of charts you trade, but you also have to get to know the prism within which they trade. So if you're trading a high-tech stock, you need to know where the NASDAQ has been and where it's going. So this is the cues. So you go up in time frames. This is an hour chart. You can kind of see the same head and shoulder that is forming on top of this one. So my note says buy the dip, but it's also a neckline that must hold. Otherwise, it's going to go lower. Arguably, the neckline is right here. But I also know that from a little bit of homework that this is where they love to trade it. I bet you it'll find footing in here. Mathematically, stocks cannot fall too far from, especially the Qs, because like 60% of them are the giga caps, and those have income. There's no big question mark in their future, like Zoom, for example. Yeah, it's a tiny fraction of it. So mathematically, there's no debacle unless Biden gets voted in or some other black swan shows up. So this is not a knock against Biden. This is a knock against that, what do we call it? Wall Street does not like change, any change, even from a bad situation. They just don't like change. So here is the cues on a daily basis, which is what most people like. Look at the lines I have. I bet you it'll say buy the dip 1, buy the dip 2, buy the dip 3. So buy the dip. Support should be here. So also buy the dip 2. So if we lose this, which we could, look, this is not a coincidence, almost to the penny. If we lose it, they're going to try to trigger a head and shoulders. Look, you can see it. One shoulder, one head, one shoulder. But it's basically a neckline that gets knocked. And it's also the resistance. So prior resistance becomes forward support. You're just looking at it like point by point. And if they lose it, they're going to try to target this. But I bet you they're going to find a lot of support zigzaggy here. So there'll be bounce, try to recover, and then they'll hit the resistance they just lost, the level they just, every accident scene becomes forward resistance. And then they'll try to get to here. If they get to here, pile in. So, because nothing has changed. It all depends on what goes on. But this is the volume profile, which means that they broke out of it. They just need time to consolidate so they can move the volume profile up. What do I mean is this is the bulk of the volume that's happened down here. This has not had time to, mature. So as time passes, this line should go up. See how it went up? Because I forwarded the time. So I eliminated the older trades. So now this time is relevant, and it has matured based on this period of time. This is a variable volume profile look. So it adjusts as I zoom in. If I zoom back out, if I go to a year, it's going to drop. So it's down here because I have 1 year's worth of efforts. If I zoom in, let's say if I take a 120, everything shifts because on the 2-hour chart, it has had time to mature. Like here, the base is solid. They're falling into a base. They're not likely to go through it like butter. All right. Tomorrow's Fed day. Have at it. Nick signing out.